That's what's driving the markets right now is this uncertainty. And, and the Fed's kind of in a weird jam right now because all of the data basically points to there's no need to lower rates right now. Mm-hmm. Even though I think the projections now have increased to 3 this year. But this uncertainty.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Hey everyone, welcome to The Market Moment. My name is Lee Mackey, here this morning with John Martfeld.
Morning.
And Eli Freeman.
Excited to be here as always.
How's everybody doing this morning?
Fantastic.
Yeah?
About 80-mile-an-hour winds, but we're surviving. We have our
today.
Producer back.
We do.
Which is pretty awesome.
Happy to have you back, Zoe.
Happy to have Zoe back, producer extraordinaire.
Yeah.
So we're glad to have her back in the saddle.
People can't see her, but she should come back here and take a bow, but she just had her first baby. So.
I mowed the last few days, so if you hear some sniffles, it's the spring sniffles.
You mowed the weeds and the dust?
The weeds and the dust, that's all it was.
Well, it's been awfully windy and warm today. I think, cooler tomorrow, next couple days.
Yeah,
and
it's bouncing around like
the
it
roller coaster
does.
of spring begins in Arkansas. But, well, we wanted to touch on a few subjects.
Exciting subjects.
Yeah, last week we spent some time talking about, for lack of a better term, the recent sell-off in the markets. And, we had a correction. I think on Thursday, maybe Thursday,
we've bounced.
We have bounced. Thursday, the S&P finally entered the official correction category of down 10% from the recent highs. As we talked about a little bit last week, those are not uncommon, although we've kind of gotten spoiled lately. But on average, we'll have a 5 to 10% pullback 3 times a year. We'll have a more pronounced correction, if you will, annually, once a year. So they're not uncommon. We just have, it's been a while since we've had one. And if you're new to investing, it might, seem somewhat alarming, but they're healthy.
One of the easiest ways I can explain it.
Yeah.
And this is not a perfect example, but it's I think easiest for people to grasp is if you were a real estate investor, you owned a property, you invested in a property, and that had rental income that was coming to you. So you were making profits consistently for several years. Well, one day the HVAC goes out, and then you have to pay for that HVAC. Well, that HVAC cost you maybe a year or two of what you're earning in rental income, and that's the cost of being a real estate investor. Well, this is the exact same thing as a stock market investor. It just comes a little different.
Yeah.
Instead of writing a check, it's watching your account balance decline.
And every once in a while, the plumbing goes out, the heating goes out, and a couple of appliances go out all in the same week. And,
right.
But you're right. That's a great analogy. So we want to spend a little bit of time this morning kind of diving a little bit deeper into that subject, but maybe from a different angle. Like I said, last week we spent a little bit of time talking about historical, ups and downs of the market. But Eli, we were kind of talking before, not everything is down this year. So let's talk a little bit about that, and then dig into the numbers and maybe the whys behind that. But we'll just update everyone. Of course, we're recording this on Tuesday morning. We're looking at numbers as of the close of the markets on Friday of last week.
Yeah.
Year to date, S&P as of Friday was down, let's call it 4%. The Dow was down a little over 2%. NASDAQ was down 8%. The Russell 2000 down 8%. So those are the negatives. Russell 1000 value up 1%. Foreign stocks up nearly 10%.
Yes.
Emerging markets up nearly 5%. And then if we want to drill down, John, healthcare up 5.5%, energy up 5%, utilities up 4%. The bottom 3 so far year to date, consumer discretionary down nearly 14%, information technology, your typical tech firms, down nearly 10%, and then communication services down 3%. So Guys, what do you make of that?
Well, that was a lot of words and numbers.
A lot of numbers. I lost my wife.
I got lost somewhere in the middle of there. But basically, if you were to summarize that, or if I was to try to summarize that for the viewers, is we're seeing what worked the last couple of years, 2023, 2024, rotate out. And what is now working are things that were out of favor. So you start to think, okay, technology, Tesla's down 50% off highs. Mag 7, the 7 stocks that we've talked about relentlessly aren't performing very well, omitting, I believe it's Amazon that's doing pretty well. But what worked in the last couple of years isn't working, and what hasn't worked in the last couple of years is working. So things like international stocks. No one likes them. No one wants to talk about them. We don't fully understand them because they're all over the place, but they're working. They're up 9% this year.
Germany itself is up 20%.
Germany is crushed.
And they've been in a recession, and they're climbing out of it.
Yeah.
And that's the revolving market world.
You've got bull markets going on outside of the United States that's driving that international index up pretty aggressively, up 9% year to date. Think about that. That's 3 months. Other thing that's working, and thinking total portfolio, is bonds. Bonds are extremely boring.
Rates have come down.
Bond yields are still pretty strong in that kind of 4, 5, 6% range. And this year, just your general bond index is up 2%. So if you think of our jobs as an advisor has been what I would call kind of hard in the last few years, because we have been pitching, and you've heard it on this podcast, we've been pitching diversification matters. And if you are diversified, you've underperformed the S&P 500. And that's just the fact of the matter. If you held international stocks, if you held bonds, that has been a drag. But in markets like this, shows you some of the reasons around why we hold a diversified portfolio.
Well, to be fair, we hold a diversified portfolio now, but we didn't start putting bonds back in until recently, right? Because interest rates were flat zero for so long that bonds weren't attractive. So we as a firm have not, we kind of started putting them in when we thought the bonds would get attractive when rates were going back up from the Fed, which is just now kind of starting to work, that piece of it. But we've been ahead of that game, which is good. But to your point, we started maybe a little early. The international side, look, long term, the market is going to go back and forth. It's cyclical. You're going to bounce from small cap to large cap, from international. Typically, our U.S. economy we think of as the best and the greatest, but
I still do.
Well, no, of course, I do too. But you go back, and international stocks are always going to be a part of the equation of winning when the U.S. is losing sometimes, right? And we just haven't lost in so long.
So here's a question to you guys about international. Do you think international countries have gotten that much better, hence money's flowing there, or are people simply cashing out at the top of the U.S. stock market and going to where the value is?
I mean, if you're talking international companies, if you think of Europe, what stocks in Europe are just outstanding companies that compete with Apple, Nvidia?
Correct. Nothing.
Or
very little.
What are you going to say? LVMH?
Yeah.
Luxury brands?
Yeah.
I mean,
there's some good firms, though. I mean, Germany has its own economy, and it's a completely different economy than the U.S.
Like who?
Well, Siemens, Nixdorf, and you could go. There's a lot of companies in Germany that we don't know that don't send us stuff, don't do anything for us,
and don't compete with the likes of some of the American companies.
Right.
So if you're to say, are the companies abroad? Now, there's a couple tech companies in China, but China penalizes people who succeed in companies that grow. So, I'm not super excited about China. But are there companies that are competing with American companies? My stance is no, but American companies are so much more expensive right now in the market because everyone has been American inclined in their investing, that international stocks are so cheap that it's just a flow from expensive to a little bit cheaper.
And I think that was my point, was it's not that all of a sudden they've miraculously gotten good. It's more of that's where the value is.
Well,
for the dollar.
I'm going to use Germany. I'm going to pick on Germany because I heard a really good story about Germany. But they are investing more dollars in their own economy for the first time in a long time. So they have gone away from, if you think about Europe, they have gotten their natural gas from Russia. They get a lot of things from the U.S. and other parts, but there's a I don't know if anybody's heard of the little tariff stuff that's going on right now, but it's made countries kind of look within, because if the tariffs are real and they are long lasting, it will affect those economies very negatively. So they're looking within, and Germany's a great example of trying to look at themselves a little bit from the inside out, which they haven't done in a long time. So I think there's some benefits to that. Now, other thing to that, because they've suffered for so long, their economies did not recover, not even from the 2008 financial crisis like the U.S. economy did.
Right.
Then you take COVID and you throw COVID in, they did not recover back from that like the U.S. economy did. So there's a lot more runway in Europe. So even if they're up 20% in Germany, they're still lower value than the U.S. markets are right now, right? I mean, there's a lot of runway. So there's a mixture of everything, like taking money out of the U.S. markets, looking more internally, being just a value position. It won't last forever, but I think that's kind of where I look at it.
Yeah.
But anyway.
Well, that's in line with the swing and the flows to value.
Yeah.
You look at most dividend funds are positive. That's typically a value play. Value meaning we're just buying stocks that aren't nearly as expensive.
Yesterday was a classic example of what you're talking about. All the indices were up, but the Mag 7 were down, and we're down pretty heavily. And then again this morning, the Mag 7, the heavy growth, are getting punished again today. One in particular, you brought up before we started, Tesla. They're down again today. They're well below their 200-day moving average.
Oh goodness!
They're down over 50%.
50.4% off of their highs.
Yes, off of their highs. They're currently trading, at 224. They hit 488, I believe. Interesting is this a political?
It's a political risk. It's a geopolitical risk. Because Elon is spending all his time in Washington, D.C. and Doge, which I applaud him for. That's great. Somehow somebody thinks that he's the one that puts the cars together and does everything. He's got a fantastic team that works. Nothing has changed. But the difference is the political environment. Now we're seeing Tesla dealerships being, attacked, people in Teslas being attacked. I mean, it's absolutely absurd and ridiculous. He's just trying to save money and find ways that we are wasting money, which we do dramatically in this country. And he's doing it by the goodness of his heart, not for money, right? He's a billionaire. So I find it kind of ironic. But Tesla was $480 a share at its high. It's now less than half of that in a very short amount of time, from basically the election to now. So a lot of that is political stuff, but also when you get, think about tariffs are a catalyst that tariffs are what people are blaming this market downturn on, is tariffs, but it's just a catalyst. You think about trillions of dollars we spent on COVID stimulus, 0% interest rates, massive deficits, subsidized growth, but none of that is sustainable. And the fixing is going to be a little painful, fixing this, right? So the catalyst of the geopolitical on Tesla, for example, but the catalyst of the tariffs are because this market was extremely overvalued. All of these tech stocks went to magnificent P/E ratio highs that we've never seen. There's going to be natural pullback. We had that 10% correction. The NASDAQ actually did hit correction territory a lot sooner than S&P barely hit it. NASDAQ was down, I think, 14% at its worst point. That is kind of expected. And then that money, where does that money go? It flows to more quality, which would be your dividends. I believe that's why things are starting to spread out, which I love. I think that's natural, right? And so
What's your take on Tesla?
Tesla long term, I think Tesla's a great long term company.
Yeah.
Still a really strong company. You look at Tesla relative to its peers, if you call its peers car manufacturers.
Right.
Good point.
Stellantis is a less than 10 price to earnings ratio because they're pricing it basically to go out of business. Ford is less than 10. The stock market is not bullish or long term bullish on car manufacturers just because of they're heavily subsidized industries that are reliant on a lot of government mechanisms to keep them running, and Tesla is not that way. So long term, I think Tesla has a pretty good position in what they do. Short term, I have no idea.
Yeah.
I do have a funny story.
Yeah, go ahead. I was going to say, if you like the stock at 300, you really
love
225.
There's now a bumper sticker, and I find this hilarious.
Yeah.
There's a bumper sticker that says, "I bought this before Elon went crazy."
Elon, that's a funny thing. I think Elon's not crazy.
I know, but it's for all the people who don't want to support Elon.
Yeah.
But they already don't get their car scratched.
Yes.
I would love to know how many members of Congress, and just not to pick on one party, let's just say, how many members of Congress own a Tesla?
Right.
How many?
Oh, you better believe
How many Democrats?
Whenever Elon is out of the White House, I'd put money down that the government car becomes Tesla.
Oh,
I mean, you start to think about maybe the mail system, and you could start to say, okay,
cheaper
now that he's out of the government, they can start to utilize Tesla.
It's really funny.
See
You
that
did
happening.
say I did notice you said first when he's out of the White House.
Yeah.
I thought that was kind of funny because a lot of people feel like he's kind of.
Oh,
in the
I
Oval
think
Office.
this has happened many, many, many times and throughout the last few presidencies where we've had people in there doing things that weren't elected officials doing things. And I think what he's doing is fantastic. So that's just my side point. But yeah, Tesla in general, I think long term is good. And you think about, forget the political stuff. Tesla has always been ahead of the game.
Yeah.
The reason Ford is down so much, Ford has invested heavily in the electric car business. Mm-hmm. The problem is if you go look at a Ford pure electric car, right? That is so expensive. And Tesla, when all of that started happening, started lowering their prices. Mm-hmm. So all of their, they're the pioneer of this, they're the best at it, and they started lowering their prices. So you've got a lot of electric vehicles from the American car makers, from other that are sitting on the lots, and they're trying to find ways to get rid of them in creative ways like the lease idea and so on. And so it's kind of interesting, and Tesla's always been ahead of that. I think Tesla's smart, brilliant, will be back. I'm not too concerned about them.
Something else I want to touch on real briefly. The Fed meets this week. I don't think any of us here are expecting any surprises. This is a big one because this is the one where the members of the committee give their economic outlook. They the dot plots, but they also talk about what their predictions are as far as the economy. Mm-hmm. So this is going to be a very important week, not from a rates going up or down, but from a what are they seeing?
Yeah. What's the future? Yeah.
And it's interesting too because inflation came in under expectation, so there's not a pressing need besides some economic uncertainty.
Yeah, and I think that's what's driving. That's what's driving the markets right now is this uncertainty, and and the Fed's kind of in a weird jam right now because all of the data basically points to there's no need to lower rates right now, even though I think the projections now have increased to 3 this year. But this uncertainty, this
all of the data besides real estate in Virginia.
in the DC area. So I mean, it is an important week, not from a rates are not going down, but from a what are they seeing and what does this because a lot of times, the Fed kind of built in what they're going to do as far as lowering or raising, but it's the commentary afterwards. But we're going to get it on Wednesday.
And listen to me later. I heard that on some Saturday Night Live or something. Hear me now, listen to me later. I think they're going to cut rates in May. I think our next rate cut, and I know that's not predicted, but there's lots of little things on the economy that I don't think we're out of the woods on anything as far as some of the short-term noise that's going to continue. And I think there's going to be now if that happens, I feel really good for example, the Mag 7 stocks. Right?
Sure.
I feel like really good that there is a opportunity for growth, towards the summer and later half of the year.
Isn't it interesting how a year ago the recession talk was so prevalent, and then it kind of went away the latter part of the year, and then it has come roaring back over the last month?
Well, it'll be interesting. The first quarter is going to come, the GDP, you have to have, supposedly you have, negative quarters in a row to have a recession, and we have not had that, obviously. Mm-hmm. I think this first quarter could be that first negative, which could lead even more, that heavy talk of recession. But whether we go into recession or not, and we've talked about this last time, whether we go into it or not, for example, Germany is in a recession still, but they're up 20% on their markets year to date, right?
Sure.
The recession is like we have been pricing in, I think, some of that in this year, even though the markets are surprisingly resilient. When you say those numbers year to date and the S&P's down, I think 2%. Is that what we said? That's nothing. I mean, for a market that's like supposedly heading into recession and we have all these headwinds and then we're down 2%, that's nothing.
Yeah.
You start at the beginning of the year and say you're down 2, that's nothing, peanuts. So the recession talk is going to pick up, though, I think, if we have a negative quarter.
Any thoughts?
Yeah, my favorite. So going off of what you guys are talking about, one of my favorite financial authors is Morgan Housel, wrote Psychology of Money. He tweeted out yesterday something that I think is a wonderful tweet. It's a little bit long, so bear with me. And he says, the cycle. First, you assume good news is permanent. Then you become oblivious to bad news. Then you ignore bad news. Then you deny bad news. Then you panic at bad news. Then you accept bad news. Then you assume bad news is permanent. Then you ignore good news. Then you deny good news. Then you accept good news. Then you assume good news is permanent. And you're back to where you've begun.
And where does he think we are now?
Right now, we would be beginning to ignore good news. Like probably you accept. We're probably in accept bad news, about to assume bad news is permanent.
Yeah. Interesting. I like that.
Yeah.
That was good.
It's actually so true, too. Perfect.
Great conversation. It's every week it seems like there's another critical thing we need to talk about, at least perceived that way. But we hope
I really don't think this podcast will age extremely well. Because I honestly think 8 months, 12 months from now, you could look back at this and be like, we were talking about tariffs. Tariffs really played out as very little to nothing.
I would agree.
Or they just completely crashed the economy and we were a little lackadaisical.
Yeah.
I mean, it's like, it's either going to age poorly one direction or another.
Yeah. I do think the era of easy everything is over, though. And I mean, and that's a different thing we're going into. There's 0%, we had for so long 0% interest rates. I know that's been gone for a few years. But just money flowing from the government free for the COVID stuff is gone. I think the easy, and then the tech stocks being just booming, just to me, it feels like that easy stuff is over. And now it's just going to go back to the fundamentals of the market.
The way it should,
the way it should. And we're cycling back to that diversification model being very important and prevalent.
Yeah.
So,
crazy.
Cycling back, I know.
We will close with basketball.
Oh, love it.
So
Woo Pig Suey. Hey, 10 seed.
Brackets.
What seed is Oklahoma State?
I don't know.
Brackets filled out.
I still support.
You still
there
support.
You go.
I still support. That's good.
You got your brackets filled out?
I haven't filled it out yet.
I filled out a couple. Yeah.
I got last year, so I'm hoping for second to last.
We will. The tournament starts actually tonight.
Yeah.
A play-in game.
The play-in game.
Who's your winner? Who do you think?
I haven't looked at any data yet. Duke is supposed.
Duke is overall number one.
Duke is really good.
What do you think?
Good choice. Well, I'm teetering between Duke, and I think there's going to be a lot of surprises this year, but I think it's top heavy. So I think the top seeds are going to go a long way, not normal. Every year we seem to have number one seeds get knocked out in the second round. I kind of think the number one seeds are going to go a long way. So I like kind of all the number one seeds.
There's a lot of people that really have jumped on the Florida bandwagon after
they're solid team.
the way they did.
Played great.
And so I'm not going to go Florida.
Okay.
I'm going to go Auburn.
I like it. Now give me a dark horse.
Auburn is strong.
So you said Duke. I said kind of Duke.
Dark horse.
But let's say somebody that's not a number one seed. It doesn't have to be a 10 seed. Just somebody that's.
Here's a dark horse. Gosh, I can't believe I'm about to say this because I think that means that they would have to beat Arkansas. But I'll tell you a team that. I mean, of course, I'm a Razorback fan. I'd love for them to go. Yeah. I'll tell you a team that could make the Final Four and surprise some people. Missouri.
Oh, interesting.
Yeah, they're a strong team.
Interesting. Yeah.
They have the kind of team that, man, if they're shooting the ball well, they can beat some teams.
They have overachieved like crazy. They were 0-18 in the SEC last year. I didn't realize that. Can you believe that?
Yeah.
They didn't win an SEC game last year, and they're now a 6th seed.
I would love to see in the Sweet 16. I would love to see there be like 12 SEC teams.
Oh, I know, no doubt.
I always have a lot of faith in Bill Self up in Kansas.
Yeah,
so
they've been struggling.
I don't want him to this year. I hope he lays an egg in the first round. Yeah. Well,
I think Texas Tech is my little and they're a 3 seed.
They're good.
And I like them and the way they play, but
Yeah. Well,
fun
this
time
time
of year.
this time next week we'll be down to 32. No,
16.
we'll be down to 16 by then.
So
So
and probably all the teams we just said will be gone.
we'll be gone. If that's happened, there've been some significant upsets.
doubt.
It will
Well,
be sweet.
It is. It's a great time of year. But
Fun time of year.
we want to thank you for joining us. As always, we hope that you'll invite somebody to listen, to watch, subscribe, give us a like, share it. But we hope you enjoyed what you heard today. For John and for Eli, we hope you have a great week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. Mach 1 may only transact business in those states in which the firm maintains a notice filing or has qualified for an exemption or exclusion from registration. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.